An independent audit and report of compliance with accounting standards, state and federal laws, and grant program requirements was completed for Jackson County. This audit and report was conducted by Moss Adams LLP that recently presented the findings to the Jackson County Board of Commissioners, administration, and the public. Let's look at the findings.
So here's our agenda of the items that we're going to cover today. We're going to go over the nature of services that we have provided to the county, as well as our required communications to those charged with governance. So that's the Board of Commissioners here. So as part of our audit, there are a number of items that we're required to talk to you about at the end of our audit, and so we'll go over those today. And then we'll discuss the responsibilities that the county has, as well as our responsibilities as part of our engagements that we perform. We'll conclude with of course, our results, the audit opinions that we issue. We issue a number of reports on your financial statements, so we'll go over those results. And then we're going to end with some trends that we noted in the county over a certain number of years, and then actually comparing to some other counties and financial data. And so those are kind of fun to see, and so we'll go over those. And then we'll end with some new accounting and auditing standards that you guys are going to see in the future. So as part of the audit, these are the services that we provided to you. So we provide an audit in accordance with governmental auditing standards as well as generally accepted auditing standards. We do that for the county, and in addition, you guys have 3 component units that we audit as well. You've got your 4-H Extension Service District, as well as White City Lighting and White City Enhanced Law District. For the White City Lighting District, because of where those expenditures fall, we actually do a review of that financial statement rather than an audit, but we do still provide that level of service to that as it does roll up into your county financial statements. As part of our audit, we do take a look at technology. So we have IT specialists within Moss Adams, and so we'll do a number of inquiries with IT staff, and then have our IT consultants take a look at that. And if there's anything identified out of that, we provide recommendations. We also use that to assess risk. If we identify risk within IT, that can be an area that has risks associated, and we would take those into account in developing our audit procedures for your audit. And then the next one is compliance with uniform guidance. This was previously referred to as our A133 audit. This audit is because you have federal expenditures or federal awards, and as part of that you require an additional level of auditing over those expenditures. Now, this doesn't mean that we only audit the federal piece, but we do issue a separate report on the audit of your federal awards. So that's an additional piece that you do have because you have a certain level of federal awards that you do receive. And then because you're an Oregon government, we do have another audit, which is the audit under municipal auditing standards, the Oregon municipal auditing standards. So we do complete that audit as well. It's required as being a part of an Oregon government corporation. And then during the audit, we're responsible for communicating with management, any findings during the audit. And then, as I mentioned, we're here today to communicate to those charged with governance, the Board of Commissioners, the results of our audit. So as part of our audit, management is responsible for a number of items. One of them is preparing correct financial statements. Of course, we're here to audit the financial statements. We're testing that they're materially correct. And so as part of that, your management puts together this document, which is your financial statement. It's quite lengthy and time-consuming for accounting to put together, and they do a great job. And they are responsible for putting this document together and making sure that they have good internal controls in order to put it together and it be materially correct. And I mean, you can tell it's double-sided, so this is quite the accomplishment to put something like that together. Management is also responsible for identifying internal controls and implementing internal controls that enable them to put something like this together that is materially correct. Management is also responsible for maintaining compliance. As being a government, you have a number of laws and regulations that you have to be in compliance with, and management is responsible for making sure that you're in compliance. And if you're not in compliance, they actually are responsible for letting us know that so we can identify what procedures or what we may need to communicate because of that. If there's any fraud, management is responsible for reporting that to us, and or suspected fraud, so that we know how to develop our audit procedures around that. So they're responsible for communicating those types of things for us. And then while we're on site for a number of days, close to 3 weeks. We're here testing, and so management is responsible for getting us all the documentation that we're requesting. We request a lot of information, and so they're responsible for getting that information to us timely so that we can complete your audit in time and issue our reports by year end. You know, you need to get those out before December 31st, and so while we're here, and they do a great job at getting us the information we need while we're here. And as part of that, actually, because you have your internal audit team, there's actually, you know, they do a number of the tests over internal controls, your passenger facility charge audit. They help with the federal awards, and so they actually get us that information while we're here as well. So there's a lot of information for us to accumulate while we're here. And then at the end of our audit, when we conclude, management signs a representation letter. So basically, it confirms a number of discussions that we've had, very significant estimates in the financial statements, and so they'll sign that letter at the end of our engagement, and that basically is how we conclude and are able to issue our reports, is really at the receipt of that letter. So our responsibilities as your auditors is to issue an opinion on your financial statements. And as part of that, we're looking to see that there's reasonable assurance that the financial statements are materially correct. That's our goal. That's the goal of our audit. And we do that with a number. We read a lot of information. We do a lot of testing, and as part of that, we issue a number of reports. We actually issue a report, as mentioned up here. There's a picture of this yellow book. That's the governmental auditing standards. So that's an additional level because you're a government and have those federal awards that we do perform. And we actually end up issuing reports over your financial statements, compliance. You have passenger facility charges, and then your federal awards. So we have a number of opinions to issue over your financial statements and compliance. And then we communicate anything that we find. If we do look at internal controls, we don't issue an opinion over your internal controls, but we do look at internal controls as part of risk. And when we do that, if we identify anything that's determined to be a significant deficiency, so something that we think that we need to communicate to you, or a material weakness where there would be some sort of risk that a material misstatement could occur, we'd be required to communicate that to you. As part of our audit and part of our review of internal controls, nothing came to that level, so we don't have anything to report to you that rose to a level of significant deficiency or material weakness. And then here are some of our reports. I'm going to go over all of the reports that we issued, but here's the kind of the main ones. So as part of these financial statements, so when we're just looking at the accounting and are these financial statements, were we able to get comfortable that that there's reasonable assurance that they're materially correct? We were able to get there. We issued an unmodified or clean opinion on these financial statements. So that is quite the accomplishment on something that's this large. And to be honest, accounting's complicated. There's a number of standards to follow that are ever changing, and so to be able to put together a new document, there was new accounting standards that were implemented this year. So that's congratulations to the county and to the accounting staff that put this together. As I mentioned, we have the Oregon Minimum Audit Standards, so we issue a report over that as well. And if we identify any instances of non-compliance, we would communicate those to you. But we were able to issue our report and found that the county was in compliance. And then the single audit. So this is the audit that's under the uniform guidance, and this is when we are looking at your federal awards. So we issue a separate report specifically for that, and if there were any items that we were found out of compliance, we would have to communicate those to you. And as noted on the screen, the county was found in compliance for that as well. And lastly is the yellow book, or the additional reports that we need to issue, because this audit is an audit under governmental auditing standards. So we issue a report on internal control and compliance with laws and regulations, and we don't have anything to report there either. The county was found in compliance. And before we move on, there are a couple other items that I wanted to mention that maybe are not up on the slide. You do have a passenger facility charge audit, and so we do issue a separate report on that as well. So this is for the airport. You do receive those passenger facility charges. So we do complete an audit over the compliance of that, and it was found in compliance as well. It does have its own separate report within the financial statements, and we were able to issue a report that says we didn't identify any instances of noncompliance. And then the other one, as I mentioned, you do have 3 component units that we provide levels of service over, White City Lighting and White City Enhanced Law, and then your new district, the Extension District. And those we were able to issue clean opinions as well.
You know, it's interesting, the focus of the audit is really on those financial statements, and do they have all the bells and whistles that are required by generally accepted accounting principles as applied to governments. And it's really not so much about financial trends and that sort of thing. And we thought it might be helpful. We've done this a number of times, I think, for you, and we've done this for some of our other clients. But wouldn't it be neat if we could help you with some of interpreting maybe what some of the financial information tells you that are within those financial statements? So we've got a number of slides maybe to try to do that. It's interesting, these financials, your accounting staff actually have to follow 3 bases of accounting. You know, there's the budgetary, so the 1-year cycle. I mean, that's like cash, or it's really almost a cash basis. What's the money that you have to spend, and what are the services that you're going to provide with that? And then there's a second basis, a modified accrual basis, which tracks receivables and things that will become cash. And there's a set of financial statements in here for that. And then finally, there's a full accrual set of statements. The very first set of statements you'll see when you open this and get to financials, and that's a full accrual concept, very similar to how commercial enterprises put their financials together. And they have to track everything, the capital assets that you have, the roads, the bridges, the buildings, equipment, your long-term debt. And so the first series of slides here are looking at that full accrual. These are probably the most difficult to understand and to get some meaning out of. It's easy to follow cash. I understand that. How much cash do I have? How much am I going to take in? What can I spend? But you also need to understand this full accrual concept to get a sense of whether the county the financial condition overall is improving or declining. So a couple benchmarks here that might help you get a sense of how you're doing overall. This is just a slide that looks at your major revenue streams and trends over the last several years, and you'll see a pretty nice trend there, some increasing revenues. You know, the only way that you can expand services as your population grows is to experience some increase in revenues. But also in here of interest is where you're getting those increase in revenues. You know, obviously there's a lot of sensitivity over property taxes. That's the one revenue stream where you've had probably the least amount of increase. And we have some other stats related to your property taxes in comparison with other counties. Where you've really seen growth is in the grants. So Amanda mentioned federal awards. That's another term for these federal grants. So you get federal and state grants. You've had a very nice increase there, and it's nice to see that because that's money coming into the county that probably didn't originate from within the county. Also, charges for services, a very positive trend there because you haven't had growth in property taxes. You've had to find other ways to cover the cost of services, and the counties that are doing well are finding ways to come up with charges for services directly from the beneficiaries of those services. You've done very well there. So a very positive trend line on the revenues, and really without increasing property taxes. So that's a good trend. On the expense side, these are the major service lines, or again, this is very high level, but a couple interesting things there. First of all, the total expenses, you'll see you were holding the line, actually dropped overall expenses in 2015. Pretty big increase in 2016. The main driver of that is actually an expense you had to book for which you didn't cut a check for. It's related to your involvement with Oregon PERS. So as you've probably heard, it's been in the news a lot about how Oregon PERS is underfunded, and that underfunded position has grown. And you had to make a book entry to recognize your share of that. That was about $32 million hit on your expenses. That represents a big reason why that this year's expense increased. That's something outside of your control. And I know one of the things that Danny and Finance have been doing is advising you to kind of hold some money in reserves, because the checks will come in the future. You'll have through the increases in your contribution rates to Oregon PERS. So actually, you've done some smart things that you can within your level of control, which is to perhaps hang on to some cash so that when those increase in contributions come, you have those resources to make those additional payments. But what's interesting here is that your general government has held the line. Where you see increase in spending is, community services and safety. So the sheriff's department, you've put your resources there. Also health and human services. So a big part of the services you provide are all the mental health services, and you've had some increases there. So it's nice to see that in the area where you're putting services on the street here in the county. So the areas of increase are probably areas that make sense for the community. And then, of course, the unfortunate increase from Oregon PERS. So go ahead. So this slide tells you so this is really a good benchmark to look at. This is your net position. So basically that first blue bar, if you were to sell off all of the county's assets at book value and liquidate all of the debts at book value, this is what would be left over. And what you want to see is at least that trend holding steady. In fact, what you really want is to see increases in that over time, because that shows that you're increasing your capacity to provide services, but it also means that you're maintaining. That orange bar or red bar, depending on your level of color blindness, that represents the portion of your resources that are capital assets in nature. Those are the roads, bridges, the buildings, the equipment, less the debt that you use to acquire those. And you'll see a positive trend there. So that's telling me that you're making investments here, which also is necessary to provide services, but it also tells me you're maintaining that. That trend line for a lot of our government clients is actually declining because of budgetary constraints, right? It's easy to put off spending for roads and bridges and replacement of the assets that you own when you have budgetary constraints. What this tells me is that you're doing a very good job of maintaining the assets that you have, and you're making some investments which enables you to provide expanded services here in the county. The next bar are your restricted resources. So those are the grants that come with strings on how you spend them, and that will vary over time just depending on timing. When do you get a restricted resource, and when do you provide the service associated with it? The last bar is the unrestricted. So that's kind of the pile of resources that are more at your discretion. And you've held the line there. It's down a little bit. Again, the biggest reason for the decline this last year was that book entry for Oregon PERS, outside of your control. If you didn't have a $32 million expense to report this last year, you actually would have seen a positive trend line there, or a continuation of a positive trend on your unrestricted net position. So overall, this is showing stability. It's showing some growth in your capital assets, and obviously doing a good job of maintaining what you have here. So that's kind of the full accrual basis. If we look at now more that modified, or there's a lot of emphasis on the general fund, because that's more within your level of control. These are the services that you provide that aren't dictated necessarily by others. So this is more of a cash, or what will become cash, less the bills that are immediately payable. And you can see the revenue stream and the expenses against it, and you've actually brought in more revenue than you've incurred in expenditures pretty much every year in there. So that's a positive trend, and your fund balance reflects that, from 49 million up to 56 million at the end of this last year. Another benchmark to look at is just cash. How are we doing with our cash and investments, and what does that balance look like? And we actually have there's 3 counties here that you've chosen to benchmark against. So we went and got those stats, and your cash position is kind of held steady, a little bit of an improvement the last couple of years, up to 150 million. The 3 county average is 174. So you actually aren't holding perhaps as much cash as the average, but you've had a nice trend line there. Go ahead. And then this is just the general fund. What is the cash and investments held in your general fund? And again, you've seen a nice positive trend line. You spent into it just a little bit this last year, but it's at 54 million. One of the ways that you evaluate, well, how much cash should I have, or what's prudent, is to look at how many days you could operate. So for some reason, if the revenue stopped, the mail stopped coming, but you had to pay your bills, how many days could you operate? And you'll see that you've been between 331 and then a slight dip this last year to 293 days. This probably compares somewhat favorably with your other counties. I'd say the larger counties may carry a little bit more cash. To me, it's not a matter of accumulating. You want to have a safe margin, and you want to be able to cover risks, and you want to hold money aside for future replacements of some of your capital assets that you are not going to finance with debt. So I would say this is probably an okay position. It's not an extravagant position, but it's certainly a healthy position. This is an interesting stat as well. What some of your brethren are doing out there to deal with their budget constraints is they're just incurring more debt. And so more and more of the replacement of capital assets are being done with debt. And what you're doing here is paying that down. So you've got a very positive trend. You've been able to make investments in your capital assets, but you're doing it without incurring a lot of debt along the way, which is unusual and actually favorable. So the next time that you need to do a big project and debt is an answer for that, you should have a relatively easier time to go to the market and acquire that debt at reasonable rates. And then another way of looking at how much you're accumulating in the general fund and what's a comfortable level, what's a safe level, you see that you've gone from a level that would cover 57% or a little over half the year to 75% or almost 3/4 of the year of expenses. So you've accumulated some reserves there. And again, we talked about some of the reasons I think Danny has purposefully worked on with finance to accomplish this. You've got some bills coming up for Oregon PERS as an example. You have some bills for replacement of capital projects. In the industry, to get the best credit ratings, you need to be over 15%. So you're very well positioned the next time you go into debt markets. You should have a very favorable credit rating, which enables you to get the lowest interest rates on that debt. So you have a very healthy position here for your general fund, and I'm sure a good chunk of this is you could chat with Danny about in terms of the initiatives to increase reserves. Now, one thing that's real fascinating to me is your property tax rate. Since you're down here, you're one of the timber counties, and I know you're not really getting that federal subsidy like you used to. but our timber counties have the worst property tax rate of the other counties in the state. And this slide really illustrates that. So what's amazing to me is that you've been able to do or maintain your financial position here with one of the lowest property tax rates. There are some counties that are lower than you, again, some of the other timber counties, but when you look at the counties in the northern part of the state that aren't so dependent or really didn't have timber revenues, their rates are over $3. Some county, I think Multnomah is over $4 per thousand, almost double your rate. So it just shows me that you've had to be more entrepreneurial down here and try to get a mix of revenues. You can't rely on property taxes as much as the several other counties here in the state. In some ways that helps you, but in other ways it's kind of a real hindrance to putting services on the street. So you've done really well with a pretty low property tax rate here in the county. I don't know, this one might be a little more difficult to kind of take a look at, but one of the things that we like to do is where are you putting your resources? What this does is show you the percentage of your expenses each year and where you're applying them. It also shows you your revenue streams and where they're coming from. But on the expense side, a couple things pop out to me. One is the general government. The other timber counties down here that you're comparing yourself against spend almost 14% of their expenses on just general government services. You're under 8%. So that tells me you're being very frugal on the administrative side here, and you're applying more of your resources to providing services on the street. So a very positive trend there. Also, just looking at the community, justice, safety, you're putting 36% of your resources into that. When you look at the larger counties up in the northern part of the state, they're only putting about 25% of their resources toward community justice and safety, sheriff services. So you're applying a higher percentage there. The other thing, it's not on here and you can't see it, but I was trying to divide up what the other counties, the larger counties, are putting per capita into safety expenses, and they're around $400 to $450 per person. You're spending less than $300 per person here. So you're putting more of your resources to safety, but you're doing it fairly frugally. I don't know, again, we're not here to make judgments about how well that's being received or how well you're doing those, but at least from a financial standpoint, you're putting less dollars into it, but a higher percentage of your budget. So if you're getting the job done, at least relatively speaking to the other communities, you're doing that fairly well. And this is just the general fund. Again, just looking at the isolation of the services that you record through the general fund. And again, you're very low on the general government side, so very frugal, a higher percentage perhaps to public safety. Again, it just shows kind of the same thing as the government-wide basis. So anyway, just stopping there, it's a lot of information. They're very high level. I guess I would encourage you to, and maybe you do, speak with Danny and with Shannon and have them present financial information to you. But these are just some very high level benchmarks. And a majority of these are very positive. You're doing amazingly well in stewardship of the resources that you have available to you. Again, I know there's more need out there than you can meet, but we're only addressing kind of the financial scorecard of telling you about that, and those trends are pretty positive. And so hats off to for your leadership and the leadership of your management team here. There are some new accounting standards coming up, and we're not going to go through all those. This isn't an accounting lecture, but the main thing I want to do is to say that you've been very supportive of the training of your staff, and I'd like to compliment you for that and show support for your continued level of interest in helping them stay on top of this. In Oregon, there's, 1,700 governments, I think, that have to file financial statements with the state. And it's a minor portion of that are able to have staff with the ability to generate those in-house. You have the expertise to generate those financial statements. I think you've got a couple members from accounting here. Is it Michelle and is it BJ? And I know Shannon is off at a conference today. But anyway, I'd like to continue to express our interest in having them get that continuing education. There's a lot of standards coming up that are complicated, and they've done a good job up to now, so hopefully that will continue. This next year, there is one standard that will affect your assessor, which is kind of interesting. So the tax abatement disclosures is a standard that will require governments to disclose in the notes the amount of taxes that you do not collect because of some abatement program. And in Oregon, that's primarily going to be through property taxes. So these will be enterprise zones, the strategic investment program, certain programs like that. And the entity that has that information are counties, specifically assessors. And so county assessors are going to hear from finance officers and their auditors more than they ever have before. Anyway, we want to be sure that you're supportive of your assessor in trying to meet some of these information needs of all the taxing districts here within the county, not to mention your own financial statements where that information will be necessary. A lot of information, but let me take a pause and see if you have any questions or want to chat about any of that information.
May I just point a few things out? Thank you for the presentation. I do want to point out that while our financial statements reflect the booking of the PERS liability, it's not a new liability. It's a liability we've had all along. It's just the first year we're required to report it. And it is larger than it has been. In fact, if we were to book it last year, we actually would have showed a net positive contribution to our fund balance because of the PERS reforms. So had they not been overturned, our position would have actually improved. And one other thing that I just want to mention with regard to PERS, besides setting aside the operating revenue for the coming budget, and PERS is issued rates on a 2-year cycle, so we have a biennium of increases of about 3.6%. I'm sorry, about 4% or $3.6 million a biennium coming 3 times. So we're going to have many millions of dollars in additional expenses in PERS, which we are prepared to implement, covering the cost of by having reserve and operating reserve in our operating budget without the need to necessarily make reductions. We also, 8 years ago, 9 years ago, maybe set up, I don't know if you want to talk to this, but we set up what's called a side account with PERS.
Yeah.
So many local governments went out and borrowed money, believing that they could beat the rate of increase in PERS costs. We actually took a cash fund balance of $9 million and reduced our PERS costs approximately $20 million over 20 years by setting up a side account. So when you look at our PERS rates, it's one thing that's important, I think, to mention because we're now reporting PERS. And Jim mentioned that the fact that we had to book that amount isn't in our control. But the things that are in our control, the ability to try to be prepared to cover the cost and then to try to minimize the cost as much as possible, I think we've been very creative and successful in doing. Even though it hasn't brought our rates down largely, it is a lesser rate than we would have had and lesser rates than most governments have. What happened to a lot of local governments when they went out and borrowed the money is they got locked into a rate that became more expensive than they would have paid staying in PERS without bonding the debt. So we're not in that situation because we made a cash payment in a side account. What a side account allows you to do is essentially earn at the higher rate, not the employer rate, and offset your unfunded actuarial liability over time. So that's the short version of what it does.
Yeah. Yeah, it is interesting that you chose to do it without debt because that's a little bit like gambling. So depending on when you issued that debt and what rate you locked in on that versus how the investments in Oregon PERS did after you did that transaction. So some governments that issued debt to create their side accounts, they did well. Others, the timing was terrible, so they locked in at a rate, and Oregon PERS investment results, in the more recent past haven't been as great, and so some of those governments haven't done well. By not using debt to fund that side account was really smart. You don't have that risk. And there are very few governments that chose to do it with cash, so that was a pretty smart move. One thing to mention, Oregon PERS, when they did the measurement date, which set the numbers that you booked in this financial statement, the overall unfunded balance was about $5 billion. This next measurement date, which will impact your numbers the next time you put your statement together, the June 17 year end, that went from $5 billion to $15 billion underfunded. So the numbers you're going to book and the expense you're going to run through is going to be very significant again. So we're going to anticipate, the book entries are going to drag your net position down. Again, it's not something you have to cut a check for. It's through the contribution rates that Danny mentioned over future periods, and you've done some real prudent things to try to reduce that impact.
I just want to say it's almost ho-hum. It's another clean, unmodified opinion. And we're still in great financial shape, but that's anything but routine, and that really is the result of just daily diligence, financial management acumen of our finance staff, our county administrator in conjunction with the board and the budget committee. But when you look at our position in comparison to other counties throughout the country, it really is no secret and it's no mystery why we are in the position that we're in, and I just want to make sure that their efforts are applauded and appreciated, because it really does mean something very significant to our county.
And I just piggyback on that too. Thank you for the great presentation. As always, we appreciate hearing how our county's doing. And I think I told you, I said it always makes us look good, but it truly is the hard work of our administration and the departments that are involved in this. And Eric Spivak's here from Audit, and we thank you for coming, and everything that goes into the work that you present to us that's done on the county side, and the strategies and the investments that have been thought out years ahead that are just, they can be pitfalls, but they've worked really well for our county, and the frugal financial work that's been done is just a credit to the staff of our county.
One thing that I've mentioned in the past too, and I'd be remiss not to continue to remind you of it, you do have an internal auditing department here. Not every county has that, or some have a department, but it's an army of one. So you fund that feature, and you've got, 3 FTEs, I think. And one thing unique about your audit shop is that not only do they perform performance audits, the efficiency issues, waste, abuse, efficiency, they also are involved in financial related controls here, which is somewhat unique, and that really gets to the accuracy of these financials. So they look at and kick the tires on internal controls here at the county and provide that service to departments. So unique, which we really appreciate. So I think you've got a very high-functioning audit department compared to some of the other counties as well. And so maybe it's no, secret as to why you do so well with your controls. You have a lot of focus on that, both internally and through the external audit process. So,
which is good. A lot goes on behind the scenes.
Yes.
Well, thank you very much, and thank you, Amanda, as well.
All right.
For the presentation.